Hello, it's Adil bringing you a review of the FTSE 100 for Tuesday's trading, the 8th of April 2014. Okay, so yes, quite a substantial sell-off today for folks. As forecast in my weekend video, we should see some weakness, obviously, with regards to playing catch-up to the US markets, given the butchering and the debauchery late Friday, especially with regards to the Nasdaq, and obviously that followed through today as well. I did get caught out on the Nasdaq on the last towards the evening. I got stopped out minus 40 only to see the Nasdaq reverse and go right back up to my entry point, which is a shame because I was expecting a rally given the BOJ meeting overnight, which is more than likely going to double the Kool-Aid, and obviously the M pairs should fly higher, and the US market should certainly reverse sharply given the amount of shorts that are in the market at the moment, and obviously trigger a short squeeze. But nevertheless, other than that, it was a decent day. I was up 100 points at one time, obviously back to plus 60 points for the day, which still, to be honest with you, isn't bad. We'll see what tomorrow brings. We can't win them all, as they say. You know, it's part of trading, folks. Losses is part of trading. The quicker you realise that, quicker you embrace that, the better you'll become. Okay, so where are we in terms of technical? Well, technicals are pretty easy. Let's look at the fundamentals first of all. Okay, so US markets obviously butchered again. The S&P 500, let's just have a look at the daily chart. Okay, so we finished obviously back into this support zone here. So given that the S&P is into support now, that should obviously bode well for the FTSE 100. So you got previous resistance equals support here, which obviously failed to hold. That's a bit of a shame. Excuse me, feeling rough at the moment. Okay, so basically, yeah, we're into the 50 MA and obviously horizontal support around the 1840 level. So expect a bounce from here, and that should obviously help the FTSE as well. We certainly seem to be making some form of an H&S formation here at the moment, so just keep an eye out for that. Obviously, this is your left shoulder here. The head's gone into, obviously, head's gone in there, and now potential bounce here, given the fact that BOJ meeting will more than likely bring out the Kool-Aid, especially given that the Yanks have sold off substantially. That's probably the only catalyst now for the markets to go higher. So obviously we have a bump higher back into the 1870 and 1880 level, and we'll see whether or not the right shoulder, the market rolls over on the right shoulder. So yet to be seen. Okay, so that's basically where we stand at present. Okay, with regards to the S&P, expect to bounce. That's basically what I'm looking for. Semiconductors, gap fill, trendline support, expect to bounce. That's what was expected today, to be honest. Obviously I got caught out on my stop. And again, with regards to the S&P 500, obviously gap fill support, expect to bounce. So overall conclusion, bounce. Okay, so we need to bounce. We need to move higher. Okay, so that's basically what we're looking at in terms of intermarket. Now, one of the biggest conundrums for me has been the inverted head and shoulders formation in the Shanghai index. Again, China was closed overnight, so obviously that couldn't impact sentiment. Okay, so that's one of the biggest conundrums for me right now. You have H&S formation in the Nikkei, and then versus a inverted head and shoulders formation on the where are they on Nikkei? Here we go. Okay, so this is something that I was speaking to one of my mentorees or students today, that we have a H&S formation in the Nikkei now, and then we have an inverted head and shoulders formation in the Shanghai. So which one do you go with? Okay, basically we go with the inverted head and shoulders formation on the Shanghai. Why? Because BOJ is more than likely to double its QE. Double its QE obviously triggers a carry trade. Obviously Kool-Aid is pumped into the system, and they can manipulate these stock markets as high as they want. Okay, adding the fact that Mr. Draghi obviously released the hat, or should we say a rabbit out of the bag, or a rabbit out of the hat. Basically, he's come out with the QE mantra now as well. So obviously it's more than likely past the parcel. Okay, with regards to these central banks, so there's a double whammy there with regards to QE. So European stocks will obviously remain buoyant and remain strong. Okay, so I'll actually swing along the DAX at the moment, so I'll probably go long on the Euro stocks tomorrow, given the fact that we've consolidated above the highs and we should continue to move higher. So that's certainly sort of an area to watch, okay, with regards to that, and the German DAX as well. Let's just bring that up for you. You should be meandering around here. Here we go, the German DAX. So basically we've gone into gap fill support now, and so German DAX into gap fill support 9450. That's exactly where the futures are, more or less around that region. So expect a bounce on the German DAX, and obviously that coincides with the to get up for on the Nasdaq, so there's certainly a bounce, and that obviously bodes well for the FTSE 100 going into tomorrow. So in terms of economic data, what came out? So we had the ECB, or we had German data come out in the morning, which was fairly positive. I'm going to share that with you now because I've just sent out an analysis to the subscribers with regards to, here we go. Okay, so this is the analysis I sent out with regards to the fundamentals. Okay, so the buy, well, in terms of fundamentals going into tomorrow, basically risk FX commodities into support, yen pairs into support. Obviously that bodes well. Yen pair is very important here. The BOJ meeting tonight, which I've already discussed. QE, the Kool-Aid, and obviously everything inflates higher. Short squeeze. Central banks screw all the shorts. Okay, so emerging markets into support. Emerging markets is a bit of a conundrum. Let me just bring up my Reuters platform. Okay, so basically emerging markets is a conundrum because the MySex was down, but yet the Russian, or should I say the Turkish index was higher. So that's a bit of a conundrum in terms of what's happening there. Given the fact that Aussie USD and Kiwi dollar and Euro dollar were all pretty strong throughout the day. Bear with me 1 second. Let me do innovate, etc. Close. I'm not using icon. Choose regions. Yeah, choose region of country. Sales action. Just give me 1 second. Okay, I'll have to set this up afterwards. Okay, bear with me 1 second. Not sure what this is. Close and start using icon. Sell side trader. Okay, sell side trader is fine. That's good. Choose asset class. Bear with me 1 second. I've not seen this one before. Just have to click anything here to get bypass this. So region Europe, obviously. Yep. Close and start icon. Not sure how that's user details successfully updated. Okay. Right, so MySex, let's have a look. MySex was down 3%, from what I understand, and if I can remember correctly, the Turkish index was held up pretty well. So overall, we'll see exactly what happens overnight. But the Russian, there were some geopolitical concerns, so that's probably the reason why, and obviously the sanctions on Russia as well are hurting their economic growth. But either way, the German data was strong. Okay, Spanish data was strong. April Eurozone Centix index was strong. Talk of G20 leaders agree to more ambitious economic reforms for growth. Again, that's bullish. ECB's new what says further rate cuts have not been ruled out. Again, that's bullish. Dovish ECB. So overall fundamentals from my perspective bullish. Into market analysis bullish. So basically, conclusion is now is given the fact that BOJ fires another one of those QE rockets, then obviously we go. Okay, so let's have a look at the FTSE itself. Okay, so FTSE 100. Okay, so I'll come on to the small time frames in a second. Let's look at the large time frames first. Okay, so bearish engulfing candle, obviously not exactly a good sign. Okay, so obviously that certainly has played out. We are into previous resistance equals support, so we're in this region here. Okay, so certainly an area that we are going to be looking to buy. So 6610 region will certainly act as support. Okay, with regards to that. So given the fact that if we expect this market to have reversed and certainly made a low in for now, then we're looking at a thrust higher here. Thrust higher into the 38 stroke Fibo, which is 50%. Again, we're into 200 MA support. Okay, so 200 MA support, previous resistance equals support. Fibonacci Fib retrace of 50%. Again, daily chart telling me support. Okay, so again, argument to go higher. FTSE 250, as you can see, double bottom there. Again, 10-minute chart, argument to go higher. We have broken this this channel, so certainly keeping an open mind here. Okay, given the fact that even though we have broken the channel, I'm just going to keep an open mind for now, given the fact that we have put in a double bottom here. So again, all we can say for now is previous resistance equals support on the FTSE 250. Okay, even though it's a bearish engulfing candle. FTSE 350 again, the market obviously is identical to the FTSE really, FTSE 100 and the FTSE 250. Previous resistance equals support. You got a Fibonacci retracement again of 50%, and we certainly have put in a double bottom, so that's certainly an argument there for it to go higher. So 38 to 58% support, fib support, previous resistance equals support. So again, argument to go higher. So let's have a look at the FTSE 100. Again, let's have a look at a small time frame, 60-minute chart here. H&S formation. So this is a conundrum. Okay, so H&S formation, H&S target, you need 6575 to complete the 65-point head to neckline projection lower. So you're looking at 6575. So again, it depends what happens with BOJ overnight. It's all up to them. Okay, so obviously if we do gap anywhere on the 6580 level, 65, that would certainly be a buy opportunity for me, given the fact that the head and shoulders has been completed. So that's basically what I'll be looking at going into tomorrow. Okay, other than that, really there's nothing that I can see in terms of the 10-minute chart that's really outstanding, to be honest. Other than that, you got horizontal support here, which is 6618. Obviously that's going to be breached tomorrow. You've got horizontal support around here, 6605, and then obviously if that gets breached, then it's 6585. So that's basically your support levels that we can see here going into tomorrow. Okay, so risk on, risk off, wax on, wax off. Goodbye now.